Welcome back. You're watching this edition of the AI Report right here on NEWS9, and the world of artificial intelligence never ends to surprise you, but something very surprising has happened in the week gone by, and we are talking about the valuation correction in the Magnificent Seven, the big tech that dominate the United States tech ecosystem. Now remember, just a few days back, there were headlines being made about NVIDIA's $5 trillion valuation, unheard of across companies anywhere in the world. Something seems to be snapping in this make-believe world of high valuations. And that snap happens to be by something which is doing the rounds and which is potentially leading to this aggressive selling that we are seeing in big tech stocks. And that is this theory of an AI bubble in the making. Now, look at just the week gone by and the kind of price correction on stocks from Tesla to NVIDIA to whoever not, to Meta, Amazon. We've seen massive corrections, but there seems to be a slight flip side to that as well, because in the week gone by itself, we also heard from Warren Buffett and Berkshire Hathaway to be making an almost $5 billion investment in Alphabet, Google's parent company, at a time when over the last 2 years it has been shedding its Apple stocks. So there is this bit of a conundrum. There is high valuation, there is some correction, there are new investments, and the big tech in itself, especially the one dominated by NVIDIA, is working in a circular economy where chips are sold to companies which are then renting those chips. So there is an infinite sort of supply and demand book already in place, and then the rental is also getting shared by NVIDIA. So there's a circular economy, there are high valuations, there is a lot of profit taking under this myth of, or potentially of a reality of, an AI bubble. So we thought, let's put all of this into context. But before we introduce our guest on this show, let's listen in first to what Sundar Pichai, the CEO of Alphabet, had to say about the ramifications of the AI bubble, if it were a bubble and if it were to burst.
No company is going to be immune, including us. If you overinvest, we'll have to work through that phase. It's also true when we go through these investment cycles, there are moments we overshoot, right, collectively as an industry.
Yeah, so that was Sundar Pichai, the CEO of Alphabet. So now let's put this entire conversation around the fear-mongering around AI being potentially a bubble. And who better to join us than Dr. Srinath Sridharan, a market commentator, a company advisor, and of course a policy researcher who's here with us. Srinath, always a pleasure having you here with us on NEWS9. First up, what's your view? This fear-mongering that is going on in Wall Street, repercussions seen across the world, including Asian stocks as well as Indian markets partly. In your opinion, is AI already in bubble territory?
Karthik, I think AI is not necessarily in bubble territory, but I think we should be in fear territory. The reality is whether we fear AI being a bubble or not, one can never predict bubbles. It can be a very small bubble, it can be a big bubble, but this time I think we also have to be very conscious of the social impact, social economic impact of AI. ChatGPT, which changed the word called AI, right? Today AI, everybody uses it probably more than they use the word FOMO.
That's right.
I think AI. So to me, AI is also a form of FOMO. You talk to corporates, they're worried, saying, what do I do? Should I adopt AI? Because if I'm not adopting AI, am I going to be cost inefficient? Is my productivity going to go down? And all of that, which has a cascading effect on employment and employability. And also the overall societal context of capital markets. The capital markets, because let's look at the structural alternatives. If you did not invest in stocks, what would you invest in? Real estate, probably gold. I'm not even bringing Bitcoin into this conversation. And probably mutual funds and all of that sort. And almost everything is becoming so expensive. And I'm talking about even the US one. Traditionally, capital markets valuation were basis the futures potential, which means the sustainable profits that you can make. And in AI, it has become almost unpredictable.
And we are not just talking billions of dollars of investment. In fact, we are talking trillions of dollars of investment. In fact, MBS, the Saudi crown prince who was in Washington in the week gone by, has pledged $1 trillion worth of investments in the US. Sam Altman once upon a time was talking about raising as much as $7 trillion. That is a lot more, almost twice India's GDP in just building the next wave of generative AI. So by what you said, the future earnings potential, which pretty much happens to be a dark hole, nobody really knows what the earning potential of AI is likely to be and the investments which are going into AI. So such high PE ratios, ballooning market capitalization, and now this week gone by of massive corrections. So is there something that big tech knows that people like you and me don't know about?
Yeah, I think the reality is in the last 20 years, the humans are giving up human cognition. And I'm being slightly cheeky and sarcastic here. Do the big techs know something more than them? No, I think they're also putting big money on them. If a company is betting $1 trillion on one single man, Elon Musk, for example, have you ever heard of a $1 trillion salary? No way. I mean, and it's becoming a bet. Yes, we might have our views, the moral views around capitalism, and I'm not getting into that debate at all. The reality is the market is betting on something. It'll either win or lose. But in the larger one, the house never loses.
If it were to, let's say, be a bubble or getting somewhere into bubble territory, and if it were to burst, now obviously we know what's going to happen to the big tech, to the Magnificent Seven, and there's going to be a massive meltdown on Wall Street whenever that happens, if at all it ever happens. And that's the big disclaimer here. But is there a direct impact likely to be on India as well, given that India does not have any of its own AI products, so to speak of?
So I think from a national policy level, I think we have a challenge that we need to build a sovereign technology over a point in time. And a classic example is China, which built its own OS, which built its own, despite being under sanctions, all of that. The reality is AI is here already amongst us. Whether it's a bubble, whether it is going to slow down, all of that is immaterial. The reality is even if it goes flat, even at the existing level, we are at a disadvantage because we do not have products that we can sell with that. And if you don't have products, you can't depend only on service because intellectual property on those products reside with the Western world or anybody who's creating and not us. And which also means that we need very large capex to build an AI ecosystem.
Absolutely. But anyway, I think a lot more to discuss on this AI bubble theory and whether it is a myth, whether it is a reality in the making. But unfortunately, that's all we have time for on this episode. Srinath, always a pleasure having you, and thank you so much for your time.
Thank you. Thank you.
And with that, we will slip into another very short break. But coming up on the other side of the break, data centers in space. How and why? We'll bring you answers to that. You're watching the AI Report.